Hi guys, welcome back to my channel. I'm Amy Richardson, also known as the Property Tax Queen, and in this video we're going to talk about how you can escape the 26.5% corporation tax rate coming in from April 2023. Get to press like and subscribe, it really helps the channel grow. So here we have it. From April 2023, corporation tax is rising from 19% up to an effective rate of 26.5%. And that is for any businesses that make profits between 50k and 250k. If you go over the 250k, profits are taxed at 25%. If you stay below the 50, they're taxed at 19%. So this is obviously going to affect lots and lots of businesses in and around the UK. So one of the burning questions is, how can you bring that corporation tax bill down? Well, I'm going to tell you exactly how to do that in this video. One of the most commonly overlooked strategies to reduce corporation tax is pensions. A lot of people just disregard it as extracting value out of a company. The main reason people do this is because actually when you put the money into that pension, you can't actually get your hands on it until I think the age is now 57. But this is still a great way of bringing those profits down. You have an annual allowance of 40 grand, which you can blast into a pension every single year. So this is a really good strategy to save for the future, and it's one of the best tax saving vehicles there is out there. The other option you could do is split income. So you could split this between husband and wife. So we may introduce alphabet shares, especially if we have a higher rate taxpayer and a basic rate taxpayer, just to make sure that we can flexibly pay out the dividends as per the tax structure. You might also want to think about introducing family members onto the corporate vehicle, assuming they actually play a part in the business, that is. Careful though, we have to think about the settlements legislation here. So we have to be very mindful of the rules and regulations around adding certain members of family, etc., giving shares away to those members of family. Another couple of options here, so if you own a property personally, you could rent that property to your business to bring the profits down. Now obviously, as an individual, you will pay tax on the rental income, and this may also have some adverse effects on BADR, also known as Entrepreneurs Relief, in the future when you do sell that business. Popular option here is to charge interest on a director's loan account. This is really beneficial if you have no other sources of income, because you can make use of the personal savings allowance. But you don't have to spend to save. You can just keep the profits within the company. So by retaining in the company, and say retaining until, I don't know, retirement age, you could then do what we call a capital distribution. So this means you'd wind up the company, take the money out as a capital distribution, and only pay around 10% tax on that money. Do be careful though, because there are certain HMRC legislation that would potentially harm you from not getting the business asset disposal relief or entrepreneurs relief of the 10%. If this is the case, then i.e. you were not awarded the BADR or the entrepreneurs relief, then the distribution would be classed as an income distribution, and you'd have to pay the higher rates of income tax, so dividend tax on that distribution. This tends to be in play when HMRC deem you to be holding cash value of more than 20% of what's on your balance sheet. They'll then try and argue that you are effectively an investment company and not a trading company. However, we haven't really seen many challenges from HMRC on this area, so it is one strategy to bear in mind. So that's it. Those are the 6 strategies there to help you mitigate your corporation tax liability. There we have it, folks. If you want to find out how to reduce your tax bill overall in your corporate vehicle or personally, then please contact myself. You can find me on Instagram at Property Tax Queen, or visit our website www.propertytaxqueen.com. Or if you have any questions around how you can mitigate tax, please pop them in the comments below and I'll be sure to answer.